Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, October 30th, 2009. It's 11:30 a.m. Eastern Daylight Time in the United States. It's 3:30 p.m. in London. It's 10:30 a.m. in Mexico City. In the United States, the clocks fall back this weekend. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. If you're overseas, our AOL instant mail address is CATEX-TV. On this day in history, in 1974, Muhammad Ali defeated George Foreman in a knockout in the Rumble in the Jungle in Zaire, reclaiming the heavyweight crown that he had been stripped of after he failed to report for the U.S. military draft. Today's birthday is Diego Maradona, the soccer star, is 49 years old today. We've got a little bit of economic news that has come in. Consumer sentiment has dropped. The stock market is dropping right now. It's down about 90 points right now. All of that sort of piggybacks on our lead story that we'll go to right now. Also economic news, U.S. consumer spending, which is responsible for about a third of the American economy, fell during the month of September for the first time in 5 months. Apparently the boost in the U.S. government's cash for clunker automobile incentive program has faded. This is added to fears that consumers may be pulling back as they head into the holiday season. The U.S. Commerce Department said that spending dropped by a whole 0.5%, the largest decline since December. This is after a 1.4% increase in the month of August. September's decline was in line with market expectations. The stock market apparently, though, is not factoring that in if they have in fact done so already. The Royal Gazette in Bermuda is reporting some very interesting news today in an article written by Jonathan Kent. They're saying that Britain's offshore financial centers have been urged, if not warned, to consider introducing more taxes by a UK commissioned report published yesterday. Former Bank of England Director Michael Foot, who is now a Treasury official, reviewed 9 overseas British territories and Crown dependencies and found that none could afford to be complacent. The report sends a strong signal, the Treasury Department says, to overseas financial centers that they must ensure that they have the correct regulation and supervision in place, while also ensuring their tax bases are more diverse and sustainable to withstand economic shocks. Translation: if you're an offshore crown colony and you're dependent on a particular industry such as reinsurance and tourism, don't expect help from the UK government because we have our own problems. Paula Cox, the Bermudian finance minister, said, "We have a diversified tax structure here based on a consumption tax model, but we do accept the point that further diversification lowers the risk of sharp revenue declines." She did not elaborate on whether the Bermudian government, whose revenues were $15 million down on projections in the first 5 months of the current fiscal year, had any changes at all to change tax policy. The UK report also found that the island was weak on fighting financial crime. Aon has come out with their quarterly numbers. They're actually a little bit disappointing. They said the net income for the third quarter of the year actually increased very narrowly up to $121 million from $117 million. But net income from continuing operations dropped precipitously, 25%, down to $117 million from $155 million. The broking part of the business was rescued by reinsurance, which saw revenues jump 50% up to $379 million. The big reinsurance numbers helped total revenues increase 3%, up to $1.47 billion from $1.42 billion. However, revenues from broking in the UK fell 8%. In the Americas, revenues from broking dropped from $557 million to $541 million. In Aon's EMEA region, revenues fell 13%. In Aon's Asia-Pacific region, revenues dropped 8%. Greg Case, the Aon CEO, also revealed that the company had spent $57 million primarily on workforce reduction. It's not known exactly how much staff had left Aon so far. Analysts had been expecting a penny more than what Aon actually produced. So we don't know yet what the shakeout on that will be. Yesterday afternoon, this news was flashed around the world. Glacier Group founding CEO Robbie Klaus has resigned from Glacier Group with immediate effect. The company, which was founded in '04 with $300 million of equity capital, has announced that its non-executive director, Todd Hart, will take Klaus's spot. Hart, of course, was the representative of founding shareholder HBK Capital Management on Glacier's board, and he's been involved with the Swiss-domiciled reinsurer since its foundation. Ex-ERC Francona underwriter Klaus will continue to support Glacier as a consultant. Glacier has put itself up for sale earlier this year, by the way. Here's an interesting story. We love to run these stories. We enjoy these perspectives from the CEOs of reinsurers. We talk often of Mike McGavick. We wish him well down at XL Capital. This is a story being reported by Bloomberg. McGavick is the CEO at XL. He said, quote, he's mystified by other insurers' rates for coverage and will maintain disciplined underwriting rather than cut prices to unprofitable levels. McGavick said, quote, we watch some of the behavior and we are often mystified by what others are seeing that we are not. We've been disciplined by where the market stands. As a result, we're standing tough to our underwriting criteria. Good for you, Mike. XL is among companies reporting a decline in revenue as customers reduce coverage and companies compete for business. In the U.S., for example, commercial insurance rates have fallen almost 6%, exceeding price declines in the first half of the year. The rates have now fallen every quarter since '04, so it stands to reason that reinsurance rates are also going down. McGavick did not name any competitors when he was discussing the lower rates, and he didn't say how XL's prices differ. He did say the places we've seen the market's pricing discipline at its worst is in U.S. casualty lines. We thought those would be areas where we see some shrinkage, and we are, but nobody else is. Not to be outdone, Evan Greenberg, the CEO at ACE, came in. He said, quote, there are some cowboys out there. There are guys writing this at what we think are pretty nuts terms. Well, Greenberg normally would be the last word on this, but Ted Kelly, the CEO of Liberty Mutual Group, actually technically Edmund Kelly, compared insurers to alcoholics because of their lack of self-control in setting rates. Quote, commercial markets have strolled into the saloon and will soon be staggering out. I'll tell you, if people listened to what they said, it would be very good news, but unfortunately that's not always the case. Stock market remains down about 88 points. We'll go to a word from our sponsors.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation. Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
Stock market's down about 120 points now. One of the things that British Petroleum undoubtedly looked at very closely when they acquired Amoco several years ago was the outstanding liability for the Texas City refinery. And today, more chickens came home to roost. BP now expects an $87 million fine. This is in relation to its response to the explosion at the Texas City refinery. BP said it's disappointed with the penalty coming from the U.S. Occupational Safety and Health Administration. OSHA this month rejected